Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, what we have seen is Brexit just remains in the headlines constantly in the UK anyway, and it's affecting how sterling is trading and also on equity markets in the FTSE 100, which is still under a lot of pressure. But I think the key factor that the markets will be looking out for this week is the Federal Reserve. How this meeting plays out this week could have a key aspect in terms of how risk appetite is perceived, and also moving into 2019 what financial markets are going to be performing. Are we going to get a Santa Claus rally driven by the potential for the Federal Reserve to take its foot off the gas? Now, a 25 basis point hike is pretty much nailed on this week, but it's not all about the rate hike. It's about what the Fed then subsequently guides in terms of future monetary policy moves. How do the dot plots play out? At the moment they're pricing for 3 hikes in 2019. However, if you look at euro dollar futures, they're actually only pricing in for another 10 basis points throughout the whole of next year, so that's less than 1 hike. And how does that now how do the difference between these two positions now start to play out? Is the Fed going to considerably cut its dot plots back? If it does, that would be perceived to be a dovish hike, and that could potentially give risk appetite a bit of a nudge higher into the Christmas period, into the new year. However, if the Fed remains on course and stays pretty hawkish in its dots, well, we could see a significant decline in risk appetite into the next couple of weeks, and that would be a real kick in the teeth coming up to the Christmas and New Year period. So it really is on a bit of a knife edge, and that's why markets are fairly quiet, I think, Monday morning. Now, in terms of how Brexit politics are going as well, Theresa May not really getting a great deal out of the European Union, and it certainly seems as though that the UK at the very least is on course for a vote of confidence in the government at some stage. Whether it's this week or whether it's into the new year remains in the power of Jeremy Corbyn, who is the Labour Party opposition leader. Now, how this plays out eventually, to be honest, who knows? But I think that the UK is likely to be pushing towards voting in some capacity, I think, next year, be it a general election or be it a second referendum. Quite which one I'm not entirely sure yet, but certainly I think it looks to be going that way. But the uncertainty is not great for anything UK based at all. Certainly sterling remains under pressure on the back of all that. This week we've also got a lot of central banks as well. We've got the Bank of England giving its monetary policy, and also the Bank of Japan. So two of the major central banks not likely to do anything, certainly not from the Bank of England's point of view, and the Bank of Japan, as ever, remains pretty much dovish anyway, so no real prospects there. But still, these announcements will be watched out for this week. So on the FX markets, well, we're seeing that the dollar has been performing relatively well, but I think that's relatively well rather than absolutely well, because I think it's more to the fact that the euro has been under pressure, sterling's been under pressure, and risk appetite has been suffering as well. That sort of all adds up to dollar performing well, yen performing also well, but the dollar is a bit of a safe haven currency choice there. So in terms of euro dollar, well, euro dollar has been drifting back towards 113, slipped a little bit below that, but bounced a bit back above that this morning. And I think that generally speaking, euro dollar is fairly range bound, but I think there is still that negative bias that we're looking at. Sterling is still a key Brexit factor there. I think we're still looking at the fact that sterling gets sold into strength. 26.60 is a key level that broke to the downside, becomes a basis of resistance. And I think that will be a key level to watch in the coming days. Dollar yen, more of a consolidation pattern. As I said, the two currencies are sort of being picked up on as safe haven plays at the moment. High risk highly volatility is not good for risk appetite necessarily at the moment. So subsequently, we're seeing the yen and dollar performing well. Now we've got, as I said, both central banks are announcing this week, so you could see some volatility through dollar yen, so that needs to be looked out for on Wednesday and Thursday, I think. So on equity markets, well, as I said, high volatility is not good for risk appetite. Subsequently, equity markets are under pressure. We've seen the Dow and the S&P 500 coming back to massive support levels: 24,000 on the Dow, 22,600 on the S&P 500. So big key support areas that are being tested, and it'll be very interesting to see if these start to break down. As I said, slightly hawkish Fed on Wednesday was likely to drive a big risk sell-off, and subsequently we're going to see these levels probably broken in that event. In terms of other markets, well, risk appetite is negative, so the DAX is negative, broke below 11,000. That's become a basis of resistance, key level to watch this week. Similar sort of story on the FTSE 100 below 6,850, again a basis of overhead supply around that level. Commodity prices, again, two factors here that we need to look out for still is this ongoing sort of negative environment with regard to global growth, and subsequently what we are seeing is the commodities under pressure. I mean, the commodity markets have been lower in recent weeks anyway, certainly potentially a key sort of lead indicator. It remains the commodity complex itself, but certainly oil has started to find a bit of a low on the decline in production levels from OPEC and friends, but it is now a demand story, I believe, and subsequently we're seeing sort of the oil price holding a bit of a support line but not really able to gain any sort of traction in a recovery. Gold is still two factors: dollar, risk appetite. So when the dollar is strong, gold is under pressure. When risk appetite is falling away, the gold price starts to gain a little bit of support, but at the moment it seems to be that the dollar is winning out as the sort of driving factor behind the two, behind the gold price. On basically economic updates this week, we've got the German IFO business climate. Again, this is a bit of a lead indicator as to where German growth tends to go, so it's a very good indicator to watch there. That's on Tuesday. We've got US inflation, current account and FOMC all on Wednesday, so some big numbers there on Wednesday. Bank of Japan, Bank of England Thursday, and UK retail sales. And then on Friday we've got US core PCE as the final really key data point of this year. So with that in mind, I wish you good luck in all your trading, and I will see you again in the new year. Thank you.